total rejection. That is the only way to describe what happened to Nifty today. If you followed our last video, we warned about the 24,400 resistance zone and the potential for a Monday trap. And that is exactly what the market delivered. We saw a massive gap up on ceasefire optimism, but the order flow tells a very different story. Today, we are breaking down the failed auction at the highs and why the smart money used this gap to exit. Looking at the 5 minutes chart, Nifty continuous futures opened with a significant gap at 24,465. On paper, this looked like a breakout. But look at the very first 5-minute candle. Notice that massive red delta spike right at the open. Even though the price was at the fresh highs, the aggressive sellers were hitting the bid with extreme force. In market profile terms, this was a failed auction. The market attempted to find new business above Friday's range, found no buyers, and immediately rotated back into the previous value area. The high of 24,469 was never tested again. This set the tone for a sell on rise day. By the midday, the market tried to stabilize around the 24,383 point of control area. Notice how the POC shifted higher today compared to Friday. Usually a higher POC should be bullish, but when the price is trading below the POC for most of the afternoon, it indicates distribution. Unlike Friday, where we saw passive buyers soaking up the sell side, today the buyers were thin. Every minor recovery attempt was met with consistent negative delta, showing that the sellers were in total control of the tape. The final hour was the nail in the coffin. Nifty broke below 24,350 support on heavy volume. We closed at 24,312, down about minus 0.23% from the open despite the gap. More importantly, we closed near the day's low. We have officially broken the stepladder higher high, higher low sequence from last week. We are now in a mean reversion phase. Switching to the daily chart, the visual is very clear. The candle looks indecisive and large. The rejection is also obvious, confirming that 24,450 to 24,500 zone is currently a supply heavy area. So, how do we trade this tomorrow? The bearish bias. As long as the Nifty trades below today's POC of 24,383, the bias remains sell on rise. All eyes should be on 24,194 to 24,200 high volume node. If Nifty reaches this level, look for delta to turn positive. This is the must hold zone for the bulls. Beware of any morning bounce. Unless we see aggressive green delta sustained about 24,400, any rally is likely just a liquidity grab for a further downside. So be cautious. The Monday's trap has played out perfectly. The market has shifted from aggressive buying to distribution. Don't get caught catching a falling knife. Wait for the test of 24,200 high value node before looking for longs. If you found this order flow breakdown helpful, hit that like button, share and subscribe, and also post your comments below this video. Trade safe, happy trading, and thank you for watching the video.